Morning, everyone. Welcome back to Morning Cup 8. Yeah, Aiman here. Right. Looking at the S&P 500, well, it closed roughly flat on yesterday's session, slipping slightly, just by less than 0.1% around to close at somewhere around 7135 points. So I think the overall sentiment was mixed, with the market lacking a clear direction, right? And also, I think the flat performance was mainly due to the raising oil prices, and also the uncertainty around the interest rate as well. And also, higher oil prices are raising concern about the inflation, reducing the expectation for the rate cuts as well. Yeah, I think also at the same time, the Fed kept the rates unchanged, right? But the I think decision was quite divided, um, signaling uncertainty on the future policy direction. So I think this added to the cautious tone to the market, and but overall, I think the market is showing some indecision, right? Balancing between strong earnings, and also the concern. Um, and moving forward, I think the market is expected to remain range bound, with the slightly upside bias, if you look here. Right. So, looking at our US trading stocks that we have published yesterday, we got here Devon Energy, stock code DVN, right? So, the stocks experiencing a breakout at $49 level, and now we can expect the stock to travel towards the $52 level on a strong momentum, followed by the next resistance at $55 level. Now, if they counter to reverse lower, right, so do watch out for the 46 dollar level for the immediate support, as it could indicate a trend reversal signal. Um, so next we have China Energy, also called LNG, right? So look at the charts now. The counter charted a rebound recently, right? Forming a higher low formation to test somewhere around $270 dollar level. So if the stock to climb up higher, we could see that it might travel towards the two 285 dollar level, together with the $300 level in the coming session. So now if this stock to slide lower below this $255 level, this might signal a shift to a bearish structure. So we have one breakout stock and also one pending breakout stocks for the US session, for the US trading stocks, right? Looking at the WTI crude oil futures, so it closed higher on yesterday's session, extending its gains with a strong bullish momentum seen during the session yesterday. Yeah, overall, sentiment remains firm, remains intact, right? But I think still very much driven by the um geopolitical concern. I think the rally was mainly driven by the escalating supply concern in the Middle East, as the US-Iran tension remain unresolved, with report pointing to a possible extension of a blockade affecting the oil flow. Right. So also at the same time, I think the oil prices were further supported by a sharp drop in the US uh, crude and also fuel inventory, signaling a tighter supply condition. So technically here, we should see that the price to test the 110 level should the bullish momentum to persist, right? So if you look at our Malaysia market, right, the FBM KLCI closed slightly lower yesterday, while the FKLI also pulled back in line with the softer underlying market. So the overall sentiment was cautious, I think, with selling pressure seen towards the second half um, of the session. And also I think for yesterday, the weakness mainly due to the profit taking in the key heavyweights, right? So especially after the recent rebound earlier of this week, right? Also, the sentiment was also affected by the mixed regional markets, with investors remaining cautious amid the uncertainty around the global, right? Particularly in the Middle East. Um, yeah, I think if you look at the heat map right here, our market was weighed down by a continued selling pressure in the banking heavyweights such as Maybank, Public, CIMB yesterday, alongside a weakness in the selected industrial names like we have Press Metal right here. However, those losses were partly cushioned by pockets of strength in the construction, um, and also energy related counters, right? With selective buying seen in names like Hibiscus right here, right? So yeah, I think just to share with you, right? So, yesterday, many of you asked me regarding this MRCB. So, might as well just share it in here, right? So, if you see, the price movement recently, I think the um the stock underwent a positive price action after the breach of the moving average. Also we noticed that the price also have breakout from the um previous resistance level, and the moving average start to form a golden crossing at the arrow here. Right, now that we see that the price has breached our second resistance yesterday, so what should we do next? Okay. So if you think the bullish momentum remains intact, right? What we can do is wait for the retracement and try to find a good opportunity at the golden ratio level at 50-61 percent level, right? And now if you notice, the level is aligned with the key support level right here. So I think there's a high probability for the price to return and rebound at this level, right? And looking at our Malaysia trading stocks that we got today, we have KSL Holdings, right? So the stock is on its pending breakout formation at 3.15 level on a strong volume, right? With that, we expect the momentum to keep bullish and the stock able to propel higher to test the 3.30 followed by 3.45 cent level. So if the stock to clear below this 3 support, this could reverse course and trend lower. Next, also we have LSH Capital. So the stock is experiencing a breakout formation at 1.85 level, and if the stock remains bullish, right? We expect the price to reach 2 ringgit followed by 2 ringgit and 15 cent in incoming session. So do keep an eye at 1 ringgit and 70 cent level for any attempt of reversal. So we have one pending breakout and also one breakout stocks for Malaysia trading stock market. Right. Lastly, for the FCPO, we'll close slightly higher yesterday, rebounding stronger, as the buying interest in during the session. I think the overall tone is improving, but still within a cautious trading range. But yeah, I think the upside was mainly supported by stronger crude oil prices as well. As the ongoing tension in the Middle East continue, right? So this has boosted the palm oil through the biofuel linkage and also keeping the price supported. I think on the fundamental side, tightening inventories and also stronger biodiesel demand outlook are also improving, supporting the price. So yeah, support will continue to come from the crude oil strength and also the supply tightness. So I think the overall market is recovering, and we do keep our positive bias unchanged, targeting for the 4680 resistance and also 4800 level for the second resistance, and our stop loss remains unchanged or remains firm at 4400 level. Right, so that's all from me, and I pass the floor to Adam. Thanks everyone and happy trading.
Okay, sorry. Good morning, everyone. So today we have a company update on Gamuda. So yesterday, they announced that they received an LOA for the the scheme Bekalan Air Ulu Padas, or better known as Sabah Water Supply Scheme. And this update was something that the market has been long waiting for, for about close to 2 years. So finally, that has actually come out. So the LOA that was awarded to the developer company, which Gamuda has a 45% stake in, which is called Abu Padas Power Sdn Bhd. The total contract value was about 6 billion ringgit. And out of that 6 billion ringgit, 5 billion ringgit would be marked for EPCC cost, while the remaining 1 billion would be used for other miscellaneous costs such as development, land, and design costs. So that 5 billion EPCC portion would then be awarded to a contractor JV company, whereby Gamuda has a 75% stake in. The remaining 25% stake is likely owned by a Sabah-related entity. So the effective order book to Gamuda would be around 75% out of 5 billion, which is around 3.8 billion ringgit. So with that, Gamuda's balance order book now stands at about 49.3 billion ringgit. And, between now and December, they would likely need about 10 to 15 billion more worth of new jobs to ensure that their balance order book target of 50 to 55 billion ringgit is achieved by end of calendar year 2026. Separately, this latest job is actually a complement to the earlier Upper Padas hydroelectric project, which was awarded back in October 2024, where EPCC works were about 2.5 billion-ish, if I recall correctly. So with that in mind, given that this latest Sabah Water Supply Scheme job is basically just working on the same site as the Upper Padas hydroelectric dam, we believe that mobilization costs, could be rather could be fairly effective, and hence, we expect margins to be for the PBT level to be between 8 to 10% versus the normal 8% range. So given that this latest job win, brings Gamuda's total year-to-date wins to about 18.9 billion versus our internal target of 20 billion ringgit worth of new jobs. We make no changes to our earnings estimates and hence maintain our target price at 6 ringgit and 1 cent with a buy call. So we think that there's still room to move for Gamuda, especially in the DC space. So that's all from me, everyone. I'll pass on the floor to the next speaker. Thank you.
Yeah, hi, good morning, everyone. So we'll talk about the plantation sector today, where we have done a report just talking about our sector view, as well as revising our CPO price assumptions as we've talked about previously. Okay, so basically for the sector, what we have seen obviously is CPO prices moving up. But it's moderated from the high of 4,776. Now it's around about 4,500 or thereabouts. And what we've also seen is that the correlation between crude oil prices has also moderated. So currently it's at 0.75 times from a high of 0.9 times at the start of the year. And this can also be seen from the largest spike in crude oil prices since the start of the Middle East conflict, where it was up 35% versus the rise in CPO prices, where it was up 15%. Nevertheless, the correlation is still high compared to 0.43 times back in 2025. So basically, if you look at where the POGO spread is now, it's back to being positive, where CPO is now back to being more expensive than gas oil, but it's at a small $11.7 per barrel versus minus $43 per barrel at the end of March, and plus $52 per barrel at the start of 2026. So with this smaller POGO spread, we have seen biofuel mandates already being announced and raised in several countries, starting with the US, where there was a 24% increase in biomass based biodiesel mandate. Indonesia, as we know, B50 to start in second half 2026. Argentina, Thailand, and even Malaysia to B15 from B10. At the current POGO spread, we believe that there will be enough money in the Indonesia's biodiesel fund to subsidize B50. And of course, there is also a possibility that discretionary biodiesel demand could return if the POGO spread turns negative. There are three geopolitical scenarios which our economics team has talked about. The first of which is, of course, the base case scenario with a 60% probability where the ceasefire persists and there's no further escalation in geopolitical premium. So based on this, we would expect crude oil prices to settle at around the mid $80 per barrel mark. And with this, CPO prices could settle at between 4,002 to 4,005, assuming a similar correlation. And at these levels, we believe that the POGO spread will still be relatively minimal, meaning that increased biodiesel mandate should still be feasible. Of course, should there be an escalation and the economics team pegs this at a 30% probability, then we could see crude oil prices rising to as much as $140 to $150 per barrel, and then CPO prices should pass the 5K per ton mark, similar to what we saw during the Russia-Ukraine war when CPO prices hit a high of 7,000 ringgit per ton. And then, of course, the best outcome of the conflict at a 10% probability is the forever peace scenario, where crude oil prices would fall to about $70 to $80 per barrel. And of course, CPO prices would also fall just as rapidly. In such a situation, the POGO spread could return to a large positive gap. So there is a possibility that revised biodiesel mandates may be delayed or postponed. But ignoring all these geopolitical wins, we would say that assuming that at the base case scenario pans out, the increased biodiesel mandates will still be in place, which would mean that the overall supplies of vegetable oil will still be tighter overall. If we look at the stock usage ratios for 2026, we estimate that most of the stock usage ratios will be below historical averages, even without the B50 mandate. So this could mean that CPO prices could still be more resilient than crude oil prices, even in a forever peace scenario. There are a few more upside risks, and of course the biggest one that we want to highlight is the El Nino probability. Right now is at 93% for the period of September to November 2026. So this is something that we will need to watch out for. Of course, doesn't mean all El Ninos may not have a significant effect. The biggest effect would be obviously when it is a strong El Nino. So right now, the probability of a strong El Nino is at 51%, and that's for the period again of November to January 2027. So if there is a strong El Nino, particularly one similar to what we have seen in previous years, then the impact of productivity can last as long as 2 years, and CPO prices would also increase accordingly. So we put in a few charts and tables to show you what the impact of a strong El Nino has had on CPO yields, and normally the biggest impact is a 1 year lagged impact. And so you can see that in 1998, 1999, and 2016, 2017, there was a 17% decline in yields, followed by a 14% decline in yields. And then, of course, CPO prices as well moved in a similar pattern where it rose by a maximum of 29% 12 months after El Nino ended. 21% and 29% 12 months after El Nino ended during those two strong El Nino periods. So definitely the severity of an El Nino episode is crucial, and we will need to monitor this very carefully. The other upside risk is also the land bank seizure impact in Indonesia, given that although we haven't heard much about it of late, but we know that out of the 2.47 million hectares of land that was seized for palm oil, 1.7 million is planted with palm oil trees, of which 50% is old and due for replanting. So we understand from our recent meeting as well with GAPKI that 1.4 million hectares will be co-managed by Agrinas and the previous owners of the land. So Agrinas will only solely manage 300,000 hectares. So assuming that the trees are not cut down immediately for replanting, this could mean that the land seizure impact to Indonesia's productivity may not be as severe. And this is corroborated by the forecast coming out of GAPKI, coming out of USDA, and even All World, where the forecasts are for a 2 to 3% growth for Indonesia in 2026. Of course, there is still an added impact of higher fertilizer costs currently due to the Middle East conflict. So we will need to see whether there is any impact there with regards to the Indonesia's productivity. But year to date, if you look at February, February output for Indonesia is still very strong with a growth of 29% year on year, of course, coming from a low base impact last year. A couple of downside risks as well that we want to highlight. One is, of course, the demand destruction, given that CPO prices are very high, and we've already started seeing this in March in India, where palm oil imports actually fell 19%. And there is also some preliminary numbers for exports in 1st to 25th of April, where exports have fallen, Malaysian exports have fallen by 15 to 17% month on month. So we're already starting to see this demand destruction. And if you look at stock levels at the major importing countries, most of the countries are sitting on pretty high stock levels, more above historical averages. China is at 54% above, Pakistan at 69%, Bangladesh at 5% above historical averages. So, which means that they have, they are not in a hurry to restock. India is sitting at stock levels that are around about historical levels at 413,000 tons. But if you look at over the last 5 years, the lowest palm oil stock level, excluding anomalies, would be 134,000 tons in 2022. So they can, hold back on their purchases for longer if necessary. The other second point, or rather the other potential downside risk is, of course, the higher input cost for planters, and this is already not so much a risk, rather than it's already happening, given that fertilizer prices have already risen quite a lot, with urea prices spiking the most at 102%. So obviously the impact of higher fertilizer prices will definitely be seen. We expect it to be seen from the second half 2026 onwards. And we have a table in the report, figure 32, as well, to show you what each of the companies have in terms of fertilizer, how much they have bought, and at what pricing. So you can have a look at that. The other point to note is with regards to soybeans, in the US, particularly, given that the latest planting intentions show that the farmers in the US intend to reduce corn acreage and increase soybean plantings because soybean uses less fertilizer. And with that, you will see higher soybean output coming out of the US, and that will put pressure on prices of soybean and make CPO prices less competitive. Although that being said, CPO prices are trading at a very big, like $418 discount to soybean oil right now. But so the other thing that's very important then would obviously be the tariff discussions between the US and China, where they would need to discuss this in mid-May. Obviously US soybean stocks are expected to jump by about 31% year on year this year, which is a very, very high level of stocks. So with more planting coming through for soybean, they definitely need to sort out this issue with China, and I think they're hoping for China to ramp purchases beyond the 25 million. If that doesn't happen, then your soybean stock levels will continue to rise, and then again, as I mentioned, pull down soybean and soybean oil prices and make CPO prices less competitive. They also need to talk about the fertilizer supply in China, given that China is the world's largest fertilizer producer and also the world's second largest fertilizer exporter. And as we know, China is already putting restrictions on fertilizer exports in order to ensure that they have enough domestically. So this ban would need to be discussed as well with the US in the upcoming meetings. So overall, we are raising our CPO price assumptions to 4,004 from 4,250 for this year. We have also raised 2027 price assumptions to 4,003 from 4,001. Earnings changes for our stocks under our coverage have been raised by between 4 to 16%. We've also updated the latest Forex assumptions. Overall, in terms of recommendations, we have upgraded 2 stocks to buy, and that is from TSH Resources and Golden Agri. And we've downgraded two stocks to sell or take profit, which is Bumitama Agri and Nusantara Sawit Sejahtera, because valuations have already risen to way above its peers and also way above historical averages. So overall, we're keeping to our tactically positive trading view of the sector, although the fundamental neutral sector weighting is unchanged. We think that in the light of a volatile geopolitical scenario, investors should adopt a trading stance on the sector, which means cherry picking when the share prices have corrected and top slicing when the share prices have performed well. So that said, our sector top picks are largely unchanged. We still like Johor Plants, SOP, TSH, IOI Corp, S3 in Malaysia, and for the regional names, we like First Resources and London Sumatra. Sorry for taking up so much of your time. Let me pass you on to the next speaker. Thank you very much.
Thank you, Leng. I'll move on to a company update note on UUE Holdings. This is a post-briefing note. We are maintaining our target price of 54 cents and our buy call. So in terms of what we gathered from post-briefing, the FY27, they do have a February year end. So FY27 is shaping up to be a stronger year. Management is guiding for top line to grow by 20% and bottom line to be at about 45% growth in terms of core numbers. Margin recovery should be driven by higher mix of Singapore billings as project approvals comes through and execution ramps up. In terms of tender book, right now it's at about 340 million. Malaysia accounts for about 167 million, which is largely tied to two potential data center projects for power and fiber conduit works, and interconnection facility for solar farm, and the remainder comprising smaller factory end users as well as developer-related contracts. In Singapore, tender book is at Sing dollar of 57.1 million, which is roughly ringgit Malaysia 176 million, with tenders relating to Singtel and a power-related subsea project. Management is also expecting at least 100 million of contract extensions from ongoing TNB projects, providing further upside beyond the 190 million new TNB contracts that was secured a year before. So outstanding order book currently is at 536 million, of which 51% actually ties to TNB projects. In terms of margins, the manufacturing segment remains the most exposed to cost exposure, particularly to the raw materials, resins. UUE has secured up to 6 months of lower cost inventory and is diversifying sourcing to cheaper import markets. Cost increase, if any, are expected to be passed on to customers. And meanwhile, for ongoing contracts, certain TNB contracts were allowed to, cost renegotiation, but this will be done via the main con, which is Sutra Utama as well as Komasi Engineering, which should help offset some of the rising expenses. And we also learned that the newer contracts actually carry better margins, should also cushion higher operating costs. In terms of numbers, we are retaining our FY27 to FY29 estimates, but this is ahead of management's guidance, which we view as conservative. With 536 million of order book in hand, the guidance from management actually implies about 45% conversion or billings, which we see there's upside risk to it. Our revenue and PAT estimate is a bit more bullish, which reflects higher expected billings as well as continued contract replenishment, while we also factor in slightly tighter margins due to larger contract mix. But all in, the overall volume of work actually supports our earnings forecast. So that's it. We are maintaining our buy with a 54-cent target price. That's all from me. I'll pass on to the next speaker. Thank you.
Hi, morning everyone. This is Vanessa from the Warrants team. So just a quick update on some of the active warrants happened yesterday. Right. So yesterday we actually see Tenaga C3V the volume pickup in the second half. All right. So why is actually one of the very popular Tenaga call warrant. Looking at it, right? Okay, we can actually notice that the exercise price is at 40.88 cents. So it's actually slightly compared to the share price, this warrant is currently slightly out of the money. So at this juncture, it will actually bring better margin compared to those, or I would say a better effective gearing, relatively better effective gearing than those which is already in the money. Yeah, so Tenaga C3B is actually one of the I would say popular choice, and also one of a good choice for you if you are also bullish on Tenaga mother share. So on the other hand, Sunway Medical, Sunmed CC, Sunmed CD, and Sunmed CO, they are all three Sunmed warrants issued by RHB. For Sunmed CO is the latest Sunway Medical warrant with an exercise price of 220 cents. So it's like out of money. However, you can actually notice that the bid price, which is the warrant bid price for Sunway Medical CO, is actually relatively lower, like it's like around 5 cents. So in this case, if you have patience, like the sensitivity is only at 3 ticks, you don't actually need a lot of time. All right, so for imagine from a bid price of 5 cents, it will actually increase for another tick that will be 5.5 cents. So I mean, it justified why the trading volume is actually relatively higher in Sunway Medical. And not to forget the EcoShop C4. So post result, I mean, it's quite it actually brought a positive impact in EcoShop mother share. So EcoShop C4 is actually the top traded EcoShop core warrant yesterday also. So the warrant from out of the money became turned at the money, and then at the end of the day is up in the money at 1.31 ringgit for the share, and exercise price compared to exercise price of 28 cents. Yeah, so 2 tick sensitivity is I would say is relative. It's actually quite responsive with an effective gearing of 4 times. And these are the rest that's actually active yesterday. Okay, yeah, so if you may not know yet, RHB warrant is actually one of the only issuer, not one of the, it's like the only issuer for US stock warrants. All right, so we do not have any US index warrants in our portfolio yet. However, we have these 4 US warrants: Tesla C8, Nvidia, Broadcom, and AMD. So all of these warrants have an expiry date of later than September 24th. Okay, so these are the exercise price. If you are bullish on Nvidia, so we have I mean, all of these are all call warrants. That's why if you are bullish on Nvidia C3, okay, in this case, and Nvidia C3 with an exercise price of 1.95 cents. All right, but if you look at it actually works the same like the local stocks. The sensitivity by ticks, effective gearing, and also premium. But this one I put it in gray color because it will be better for you to check after the market is open. Okay. Yeah. So with this, if you would like to invest in the US stock warrants, there's actually some tips for you. So during the daytime, you don't actually notice the price change frequently. That is due to the time zone difference, right? So for whoever investing in the US warrants, then you can actually expect a few days of investment horizon compared to like the local stock warrants that you can, or maybe the index warrants that you can actually trade during the daytime. But for US stock warrants, you will actually have to prepare a few days of investment horizon at least for you to actually see the price moved. Okay, so Tesla, Nvidia, Broadcom, and AMD. So all these you can just invest in Ringgit Malaysia, less than 20 cents, the warrant bid price, and you don't actually have to convert your money to the US dollar and then invest into the mother share directly. Yeah, so this is actually another alternative for you if you're still bullish on it. Okay, so if you have any questions or any inquiries, can call us at this number. So I'll be picking up the calls and address to your questions. Okay, so thank you so much for dialing in. We'll see you no, not tomorrow. We'll see you on Monday, RHB Morning Kappa at 8. Thank you.